Could the PCE report flip the script and bring Fed rate hikes sooner? This week holds a major inflation catalyst that could shake everything from FX to cryptos. It's your week ahead at XM, and let's get into it. On Monday, Wall Street is closed for Memorial Day, but don't get comfortable. Thin liquidity is where markets get risky. With fewer participants, even small orders can trigger big moves. Forex and crypto markets remain open, meaning we could see heightened volatility if any headlines hit. On Wednesday, the Reserve Bank of New Zealand meets, and although a rate hike is not fully off the table, investors will likely focus on forward guidance. If the RBNZ signals future tightening amid global inflation pressures, this could increase volatility in the Kiwi. Turning to Thursday now, we'll get the second estimate of US GDP for Q1. If the economy continues to prove resilient, that could boost Fed rate hike expectations and therefore further support the US dollar. And speaking of the Fed, Thursday also holds its favorite inflation gauge, the Core PCE report, crucial for sentiment and monetary policy. A hotter than expected number could directly dictate monetary policy expectations moving into the summer and bring the timing of a Fed rate hike forward, perhaps even in 2026. In such a case, we could see the dollar rally, gold coming under pressure, and a potential sell-off in stocks and cryptos. Cryptos in particular have been highly sensitive to the Federal Reserve's interest rate trajectory, and a hot PCE could hit risk sentiment and weigh heavily on Bitcoin and Ethereum. Also on Thursday, the Jobless claims will offer a real-time pulse check on the labor market. A strong print could reinforce the Fed's higher for longer stance, which is bearish for risk. On Friday, we have the Canadian GDP report, a big moment for loonie traders. The Canadian dollar has gained on stronger oil prices lately, and a strong data set could firm the loonie further. Friday is likely to be a big day for the yen, too, as a hot Tokyo CPI print could increase chances of a Bank of Japan rate hike in June. If that's the case, the yen could firm, leading to volatility in dollar-yen. Beyond the data, though, geopolitics remains center stage, and any escalation in the ongoing US-Iran conflict could spike oil prices, feeding directly into inflation fears. Finally, for pound traders, politics are currently overriding macroeconomics. Prime Minister Keir Starmer is facing revolt within his own party, and the ongoing political instability could likely cap any major rallies for the pound this week. This was your week ahead roadmap at XM. Do you think it might be a defining week for markets? Let us know in the comments, and make sure to subscribe to stay up to date with all market news.